Hey, everybody, episode 55. I might preach a little today. Today's sermon would be about patience and it would be about trusting the process. And of course, episode 37, which is Ask Matt how to average down the right way. Now, I'm going to come clean first in my transparency, and I'm going to tell you, I understand when you have small accounts how hard it is. I started a small account challenge yesterday with 2,500, and I'm coming clean right here. My first trade were edit puts, EDIT puts. And if I'd held today, I would have returned 500%. But I sold with like 100% profit. So I was up $600. And then I crushed my account. I sold into something else. And then I averaged down the wrong way. I had to make a decision today. And I bought Triple D, DDD at $35. And it went down to $34. So my account is basically down 60%. Now, I made money as a trader today because I gave some great alerts out. However, I understand your small accounts. It's so tough. When you have small accounts, it's easy to blow it up if you make one wrong decision, if you average down the wrong way. So I understand that. Again, I had a great position that I gave up yesterday. I entered into Tiger, 4 options. I made 20%. Great. I had another position, DDD, that I carried overnight. I thought it was going to spike this morning. When it went down, I averaged down and bought more. No, I should have went into STX or UVXY puts, which I was talking about. So I get the small accounts are tough. And that's the first thing I want to say is I understand now how hard it is when you have a small account, how easy it is to blow it up, how easy it is to get angry. God, I'm in the wrong position. And then you average down the wrong way. So here's the warning. Buy one option. If you hear an alert or you like something, wait 10 minutes. If it goes down, buy one option. Wait on averaging down. I'm going to talk about waiting to the right point to average down later today. But let's talk about why you guys are here. You're here. Or I'm here, I guess, to facilitate your learning, to make you better learners, to understand trading better, okay? I'm here to improve your skills and give you tips like episode 42, right? Get the max profit, create a spreadsheet. I want you to be the most efficient trader you can be. Now, I don't have a crystal ball. I don't control the markets. I don't hype up individual stocks and then try and sell them off. That's not what I'm about. I track volume, I track demand, and I anticipate spikes. So when I see 5 straight selling days, let's just go to DDD, 5 straight selling days, outflow volume so small, I know the next inflow day is going to be like a 10, 12% spike. Yes, it sucks that it's going down to get there, but I saw the same with STX. And yes, I entered into STX too soon, 13 straight selling days, and I decided to call the bottom. Yes, I was right about calling the bottom around $85.50, but what happened is it was fighting it for like a week straight. So today I think it crossed $88, and then it rescinded a little to like $87.75. Yes, STX is going to $90, $91, something like that. Okay, but let's not get carried away. I'm going to talk into my trades today because I don't want to get too far ahead of myself. Now, I want to make a point. I want to average down, or I averaged down on my spreadsheet on Delta and Carnival today, okay? Delta was down to like 42 and change. Carnival, I think, was down to $24, maybe even $23.98 or something like that. I waited 2 full weeks before I averaged down in those positions. I was looking for a rebound 2 weeks ago when the Dow started to rebound, but no, I got fooled. The Dow sold off. We spoke about it. Every day I speak about how tech is stronger, how the Dow is weak. I'll tell you why real quick. All right. As long as the 10-year and inflation remains down and the dollar is strong, it makes it more interesting or more a better opportunity for people to invest in tech. It's more speculative, so they get a greater return. The Dow stocks, everybody know, no one's going crazy to jump into Carnival today. Why? Because they're not even sailing. And if they are, it's like 1 ship, 2 ships. No one's going crazy, but they will. It will spike at some point. So again, I average out that way. I don't want to get sidetracked, but that's what you're seeing. So tech is strong. Dow is a lot weaker. But let's talk about the positions today. I finally chose to average down on Delta and Carnival. Again, my Carnival's $25 options that expire in October. Plenty of time. I mean, I'll be breaking even if Carnival's $28 by October. $28. I think it's going to be $52. All right, Delta, my $42 options, I'll be even at like $45, 45 and a quarter actually. Guess what? Delta's going to be like 62 by September. So yes, that's how I average down. You hear me talking about it on every episode. I don't change those options. September for Delta, October for Carnival. And yes, on Friday, I mentioned I bought like little under $250,000 worth of Apple and Knox. I bought plug options out till January. I bought Disney. I bought stocks that I thought were going to excel extremely well. Let's talk about Nancy Pelosi. she's made a ton of money on Amazon. You know how the cloud computing, they broke it up between Microsoft and Amazon? I think she made like a few $1 million. It's ridiculous. I hope she gets investigated. Okay, what else did I do today? UVXY, it spiked to 28.50, and I was too smart for my own good, and I bought 44 contracts. Yes, that's not dipping your toe in, Matt. That's like jumping ship. 44 contracts at $1.39. What happened? It spiked to 29.01. I entered a second position that I tweeted about. I bought 86 contracts. I almost doubled down. All right. It was only $1.17. So it was only 12 cents off. But again, I felt like that's got to be the top. That's got to be the top. I'm not going to be wrong. What happened? It spiked. I said if it spikes to 29.50, I'm doubling down. It did spike to 29.50. It spiked to 29.70 something. At 29.50, I bought more contracts. So as soon as that got activated, I bought those at $1. I think it went down to 95 cents. So right away, my third position was down 5%. My second position was down like 35%. My first position was probably down like 50%. All right. But what happened? Well, UVXY turned around. Okay. I sold half of my contracts for $1.56. All right. My average was $1.13. So $1.57. So that's 43 cents or $43 per contract, which was like what, 35%. Half of them. But I held 110. And when it dipped at $1.38, what did I say I was doing? Buying 78 more contracts. The same contract I sold for $1.57, I was buying for $1.38. I saved $19 per contract or 17%. So when I teach you guys a lesson about getting out of a position at the spike, you can buy back in the same position. I don't care what it is. Say you like STX like me, and you're like, it spikes every morning and then it dips every afternoon. Sell on the spike, wait for the afternoon, buy on the dip. It's easy, okay? So that was STX, right? I said it was going to 88. I think it crossed 88, went back. I see 90, and then I see 95. So I'm very happy with my July 9th options. I'm very happy with my July 16 options. I bought some August options, which I mentioned yesterday for STX. So yes, I'm expecting a spike, and I don't think 2.5 or 2.75%. I don't think it's done. I'm expecting a spike past 90. I don't know if it's happening tomorrow, the next day. Please don't get on me with time. That's what I'm saying. I don't have a crystal ball. What I can tell you is what's coming in the future. What I can't tell you is that it's happening Thursday or Friday or Monday or Tuesday. But anytime you don't believe me, and these are for any haters out there, and there have been a lot of haters, which means my shit's probably blowing up. All right, for any haters, just go back. I dare you. Watch some videos. Watch episode 3. You know what? Pick any episodes you want. And you tell me where I'm not being transparent, where I don't share my flaws in trading, because I told you again today, I made money today as a trader. My small account blew up 60% today. All right. So I get it. If you missed that, you want to go back and rewind to the beginning of this live stream, because I come clean. And it's not like coming clean. It's like I'm talking to you guys live. I'm sharing my own experience with you, and I'm hoping you can relate. That's what my platform's about. It's about finding a family that you can relate to. It's not, I'm not telling you what to buy. I'm not telling you what to trade. I'm transparent. I show you what I trade. And I say, if you want to follow the 10-minute rule, 10-minute rule is I make a purchase, 10 minutes later it goes down. Okay, so if you want to trade the right way, please, and be profitable, you're welcome to join my platform. You're welcome to just subscribe to this video. I know it goes out to like 2,000 people, or YouTube shows it to a lot more. But please, if you're getting content, like the video. Share it with someone. We're trying to grow this organically. Carlos and I and John are a 3-person team, but it's Carlos and I mostly. We help Boris on the side. But we do this ourselves. We don't advertise. So everything is word of mouth. Now I think we're like 1,100 strong. I think we might be approaching 1,200. The platform is growing. We trade the correct way. Now, again, ways to blow up your account. And I'm just going to jump ship right here. Ways to blow up your account is you get overly excited. I've been on fire for 9 weeks, and I've been off fire from Thursday, Friday, and Tuesday. So 3 days, and you can blow up your account. It's one trade that can blow up your account. All right. So again, transparent. I killed it for 9 weeks. I'm going to admit that when I struggled for 3 days, I wish I had played different options. I wish I had waited. I wish I had played a different side. I mean, if I had reversed all my trades, I would have crushed it for 3 more days. But it isn't who I am. I'm the guy who waits for the UVXYs to spike when the market's at its worst, and I buy the puts thinking that the market recovers. All right. I'm the bullish guy. If you're the pessimist and you're the asshole, and I'll say it, you're the asshole on Webull who wants to make comments about me and say that I lose money for my platform or anything negative, you can take that shit out the door, because I don't want it. My platform is about positivity. I'm not like those other gurus who tout certain stocks Or like Options Whale, guy's great. He posts so much data about different options. So again, I give credit where credit's due, okay? Everybody serves their purpose, but I look at shit live. I look at the market. Now, if you told me China was going to throw up on itself, I would have told you, get out of Tiger. Unfortunately, or fortunately, I got out of my 4 Tiger contracts, not the spreadsheet alerts this morning. Why? Because my spreadsheet alert were so far out of the money that I wasn't going to get any money. So I'm looking for China to settle down, and maybe I get a miracle and it pops. It's always risk versus reward. That's why I'm still holding on the 25s and the 30s, which give me over a week. So anything's possible. All right. So here's the challenge to you guys. Anybody here, I challenge you to watch 6 of my videos. I'll call them out. I said I wasn't going to, but watch options video number 3 to options. Okay. Number 8 was a good episode. Number 18, where the light bulb went off and I mentioned how we're going to start trading ETFs. So if you don't know what ETFs are, watch 18. Okay. We had a tough week. It might've been like April. We just started out. The market was down in like 10 to 12 days. And I said, light bulb moment. We're going to trade ETFs, which are like the UVXY. When volatility spikes, we buy puts, meaning we expect the markets to stabilize, which they did, okay? My puts are making money. I sold half. I bought more. But here's the challenge. Episode 3, 8, 14, get out of a shitty stock. Episode 37 is a must. If you play with options, and when I say play, I mean invest with options. You're using your own money. It's serious. You better average down the right way. If you miss calling the bottom, I miss calling the bottom, and I'm freaking good at it. But I miss calling the bottom. So if you miss calling the bottom, right, you got to watch episode 37, because if you buy too many options to start, you jump into a 10 option position, 10 contract, you're going to crush your account. I don't care how big or small account. And I did this yesterday, and I'll explain it real quick right here, okay? You have $10,000 in your account. I want 1,000, a tenth of that diverted to whatever it is. So if you're investing in water bottle options, okay, your first buy would be like $300. It goes down, you put in another 300. It goes down again, you put in 600 more. Now you're fully vested, 3 times invested. You're in for $1,200. It's like 1/12 of your total complete portfolio. If you invest in something and you buy 5, and then you buy 12, and then you buy 20, and you're 37 options all in with whatever it is, $10,000, $5,000, $4,000, it doesn't matter. If you're 37 options all in by like 11 a.m. and you're just watching the market, that's exactly what you're doing. You're watching the market. You're not investing. You're not investing. If you have no money on the side, so when I give an alert or you see something in the market where you can actually pick up either shares or options, I don't care. Okay. I named 4 stocks. 3, because only 3 are up. I named 4 stocks yesterday. 3 were up. All right. The first one was SolarWinds, SWI. So we were in at like $17. I think it's north of 17.5. The next one was Cryosport. Again, you have to watch yesterday's episode. I shot a slide about it. I might have a slide today. The point is, I got into $59.5, and I think it's up $2. $2 is what, like 3.7%. So again, these are big changes, okay? Roblox, I think, is up, and the other one that went down was apps. And yes, apps got killed. Somebody said, is it a good time for apps right now? And I said, no. See, I can admit when I'm wrong. The time for apps, not today, when it finds the bottom. Same with Tiger. Time to invest? No. If you tell me it's the bottom and you guarantee $20.50 is the bottom, it's not going any lower, then yes, it's the time to invest. Other than that, I don't know where it's going. I know there's support. I know people are buying it, but they're buying it for the long term. 6 months from now, it'll be $44. Yes, by the end of the year, I keep saying $44. So to that jackass on Webull who wants to quote me, $44 by the end of the year, December 31st, okay? I didn't say $35 by next week, and I didn't know China was going to restrict all the data from their companies because they're so worried about China's sovereignty, okay? They're worried about the Chinese nation and giving up the secrets and the Chinese people's data to American, anyway, it's regulators, because we regulate their companies now, and that's why they're having problems in their IPO. Okay, what else did I want to talk about today? I think I had some slides. Yes, so let's do some slides. Oh, please, before we do slides, so take a second. Again, I'd rather you try and grow this family with me. Pay it forward. I charge $3.49 a week. Just to clarify, $3.49 a week. I do YouTube every day. I send out a massive number of tweets. I care. All right. I do live videos every day because I care about my family members, because they are my family. This is real money. So although I'm only charging $3.49, because I want the entire world to join me. I want my world to join me in this revolution. I want 100,000 traders to understand how to trade the better way. So if we pick out a stock and we see that it's a good value and we wait for the biggest dip, we're screwing over the institutions. We're trading the right way. So when we screw the institutions and we get the best dip and we're profitable and we secure 20% or 25% or 40%, you have to use your spreadsheet. All right, episode 42. If you don't know what I'm talking about, episode 42, learn to use a spreadsheet. But you have to use a spreadsheet. We're going to screw over the institutions. They used to scalp from us. These institutions would buy and sell in one day. They didn't hold their positions overnight because their mentality is to make as much money as possible. So they sell at the high and they buy in the dip. That's what I'm telling you guys. So when you told buy the dip, that's right, but you have to figure out the dip. If something's going to keep dipping, and I mentioned this early in the streamcast that if you missed it, I averaged down with Delta and Carnival today because I think it dipped hard enough. It's always risk versus reward. So at $24, I think Carnival's a steal, okay? At Delta at $42 or $43, it's a steal. If it dips, it might go another like 2, 3, 4% max. The upside potential is a quick 10% in one day. Once people figure out that Carnival and Delta have bottomed, it's going to move 8 to 10% in one day. So that'll be the day that I'm buying options. The day when Carnival and Delta cross 2% or 2.5%, and it feels like a strong Dow day where the Dow might roll off like 480 points or something like that. And you could snapshot this because it's coming. There's going to be a day coming soon where the Dow rolls off 400 to 500 points in the day. And the Carnivals and the Deltas and the Wynn Casino or Las Vegas Sands, they just rip a new one. 8%, 6%, 7%. So on that day, when you see it happening, okay, again, I'm a bullish person. I'm not a pessimist. On the day you see that happening, the UVXY will be going down. Those stocks will all look good pre-market. There'll be some type of good COVID news or some type of vaccine news or the economy's open again or jobs news, and the Dow will rip that day. So remember this right now, because that day when you see everything up 2, 3%, you buy those options and you're going to clear a quick 50%. So there's a free day right there. You don't have to worry because you know it's coming and you're going to get the best deals, because even on that day, it will dip in the morning. If your stocks are all up 3% pre-market, you're going to see the market open up. They're all going to go dip, 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 dip. That's the time we buy. Now, the worst thing is first, you have to plan ahead. So if you're paying the ask or the bid, you're wrong. We're planning for the dip. So if you're looking at an option, it's $400. You're planning ahead. You say to yourself, Jim, Joe, Judy, whatever your name is, you're looking at a $4 option. I don't care if it's Square, PayPal, eBay, whatever it is. And here's what happens. You go in and you say, I would pay $400 for that, but I'm not. I'm going to put in a bid for $270. Now, if it happens, I just saved 33%. Do you get it? If it doesn't happen, you didn't lose any money. But if you've done that with any of these stocks I mentioned, eBay, Roku, Square, you'd be crushing it. You're basically buying the dip, but you're preparing ahead of time. So when the market's going crazy at 9:30 in the morning and it's spiking and going down and your stock's up 3%, then it's down 2%. Guess who sold to you? Some scared seller sold his options when it was down 2% and his option was only down 20%. He sold it to you down 33% because he was just looking to clean his hands and get rid of it. So that's how we get the steals. That's it. Normally, besides for that, I don't buy options before 10:30 a.m. If you don't understand that, watch episode 47. Now, when I name these episodes, it's not because I'm trying to tout my own shit. These are episodes that are going to help you. If you watch 47 and you understand why we don't buy options before 10:30 a.m., you'll never freaking ask me again. You'll never be like, hey, man, how come you broke the rule? What did you do? Because you're going to understand. Watch episode 47. All right, I got some slides. Then I'm going to talk about maybe a stock or two when we get into questions. Maybe I'll just sidetrack. All right, so here it is. Transparency. Russ, again, like 2 days in a row, I've complimented you. Yes, you lost money yesterday, but you didn't have paper hands. So your trade, and this eBay trade that you invested in here, I mean, I don't know why you only invested like $900, 5 positions. The point is, if you lost $12,000, I would have put like $5,000 into this trade. Point is, we returned over 100% on this trade today. You made some decent money on your other one. I think you made $2,500. So hopefully your losses are less. I don't want to harp on it too long, but I do know you're learning. I even mentioned to Carlos today, you're learning. Can I get the next slide, Carlos? So Russ is doing a much better job. Trit, this is my warning, and I'm sorry to bring it up every freaking live stream, but it's been 3 days in a row. I don't want to be called leaving someone with a bag holder. So my platform members, when TRT, which I still like TRT at $5.60, when it spiked to $7, I made an announcement at 3:11 p.m. Lots of time, 49 minutes to get out of the stock or your options. That's probably going to go south to 650. It went to 650 the next day. Do you know what happened the next day? It lost 3 more percent. Do you know what happened the next day? I think it went down to like $5.60. Well, if you sold at 7 and you bought back at 5.60, I'm not saying I did not buy back in. You saved 20%. Instead of being a sucker and riding the elevator up and down. Next slide. I don't want to harp on people's losses. The worst thing. Okay, this is Love. She blew up her account, and I use her as an example every day because she tweets the most like, it seems like simple, but it's not, but it is. All right. She blew up her account. 10 days in a row blew up her count. Many lessons learned. You do not need to average down every day. So I'll bring up Delta and Carnival again. For 2 weeks, I've wanted to average down on those, and I haven't because I'm like, the Dow could go lower tomorrow. The Dow could go lower tomorrow. The Dow could go, and I still think the Dow could go lower tomorrow. But I'm telling you, one day in the next 5 trading days, the Dow's going to have an explosion of like 400, 500 points. I just feel it. It's just like that volcano. It's building. Like there's too much cheap shit. I don't care if it's Disney or other stuff. And STX is right there. STX had 13 straight days. It is a Dow stock. It's a 3-letter stock. STX, you guys saw it. Finally, there's been demand. 3 out of like 6 days or something like that, 3 out of 5 days, and it's still fighting. Imagine if STX had 5 straight green days in a row. Yeah, it's coming. $98, $96. You'll thank me, and then maybe everybody will preach the word of 349 trade. It's not the word of Matt. It's the word of family. All right, so go on. You can't average down every day and expect to be successful trading. If I knew today or yesterday was going to be red, and I knew Thursday and Friday would be ready, I would say, all right, we can either sell or suck it up. If we suck it up, we're going to wait until Tuesday to average down. Tuesday, late Tuesday, or even late Wednesday. Stuff looked like shit today. So this is a gentleman. He said, my biggest fault, and this is my biggest fault. Anytime you get a big pile of cash, you get a big score. You're like, yeah, I just turned 4,000 into 40,000 or whatever it is. Some great amount of money. That's just, you could buy a car or something like that. You get greedy. Instead of buying 1 contract next time out, you buy 10. Instead of doubling down and buying 2, now you're in for like 30 or 40, and then you're in for 140. So 25% rule, meaning whatever money you have set aside, $3,000 for this play, great. Your first purchase should be $750 or under. 25%. That way, if you need to average down when you're down 40 or 50%, all right, if you don't know this, you don't know my rules, you're not part of my platform, but please, I talk about enough. But if you're down 40 or 50% and you're not falling in the knife, it feels like it's turning around, okay? Feels like it's turning a corner. Then you average down. I speak about averaging down, episode 37. I can't do it again. All right, but this guy got it. Again, couple of positions. If you're killing it and you have 60,000 in your account and you put 6,000 here, and the market shits on itself for 3 days and you average down the first day with like 10,000, you're dead. You're dead after Friday. When Tuesday throws up on itself, or you're dead after Thursday when Friday throws up on itself and then Tuesday throws up, you're dead. It's done. You're so depressed. You're probably in bed right now watching this, which I appreciate your time. Thank you for being in bed watching this. Next slide, please. All right. The market was getting crushed. Was not a spreadsheet alert, but it was an alert. I said yesterday, if I had more money, or if you guys have more money, I would buy eBay options. I bought it. eBay was $69. Somebody said, what's your exit strategy? Well, of course, every time you enter in something, you need to know your exit strategy. I told the gentleman, $71. However, when it spiked this morning to $70.40, my option was 100% profitable. I decided to sell. I didn't pre-plan, so I only got 95%. Now, what happened? When it dipped, I tweeted again. I think it was $69.52 or something like that. I tweeted, I'm going to re-enter that eBay position because I know eBay is strong. Now, I know it retracted a little at the end and probably finished around $70 or $70.10. But yes, I like eBay. 71 easy sometime tomorrow or Friday. There's just demand and 4-letter stock. NASDAQ, unless, and I can look, the 10-year spikes, I wouldn't worry about 4-letter stocks tomorrow. All right, next slide, please. Okay, alert, STX. Oh, this is great. Just show you I'm human again. I bought $5,000 worth of STX options this morning. All right, I was so in a rush to tweet it out in all transparency and share. Guess what I did at 10:20 a.m.? I bought $5,000 worth of put options. So it was going up, and I'm like, wait, the stock is going down. What the hell did I do? Somebody on my platform said, dude, I thought you bought the wrong options. At that time, I already realized it, but I appreciate that. It's always good to share. If you think someone screwed up, tell them nicely. I think you screwed up, but I bought the wrong options. I sold. I literally made probably like 6 or 7%, and then I quickly looked for the bottom. Now, here's what happened with STX. Again, $86. I called the bottom. $86. What an idiot I am. Because after I alerted everybody at $86 that I was doubling down, STX went down to $85 and like 52 cents. So anybody that wanted in cheaper than me, and I was happy. I think I paid like $1 something for my last options. No, wait, I paid $1.78. I was happy at $1.78, right? Right now they're like $2.78, okay? That's like a 70-something% return. I'm happy with 70%, and I think it's going to get better. So anybody that's smart enough to understand the 10-minute rule with Matt tweets he really likes STX. Oh, it just fell off the shitter, right? Because it got crushed 50 cents right after I tweeted it. Okay, so if I paid $1.79, you could have paid like $1.45. If somebody's scarce sold $1.40, it's already $2.80. That's 100%. Yeah, STX looks good. All right, next slide. Point is, I make mistakes. I bought puts. Now, the last 2 times I've done that, it's worked out. Okay, I think I explained how I messed up my UVXY earlier, but if you missed the earlier live stream, I'll quickly repeat it. This morning at 28.50, I tweeted I was entering into contracts. I bought 44. It went up to 29. I then bought 82 or something, or 84. Then it went up to $29.50. It even went higher. I bought another 110 contracts. When it went down, I sold half of it, kept 110. When it continued, I think I bought 78 more options to carry over to tomorrow. I've got 188 live UVXY. I think it's going down. I don't care about after hours. You show me 10:30 where the UVXY tomorrow is, and I'll tell you that it's under $28. Guarantee. Let's make that bet. Hey, let's do this. If the UVXY is under, right, $28 at 10:30 tomorrow morning, join me. All right. There's 160 something of you right now. UVXY under 28 at 10:30 a.m. in the morning. I don't care what it does after hours. Join me. Okay. It's going down. Next slide, please. God damn, it is hot out today. Yeah, live. Okay, here it is. See, this is better, man. Carlos, why didn't you tell me it's right here? It's right here. Exactly what I was telling people. They can read. All right, next slide, please. Here it is. I mean, I share STX. I miss calling the bottom. And this is what I was just talking about. I probably didn't organize these very well. Point is, after I alerted, it went down and you could have saved another 30%. I was down probably 20 or 30% right after I bought it. Why? Because I paid $1.79. It probably went down to $1.45. All right, I was down probably like 20%. All right, not killer. Point is, you could always get it cheaper than Matt. That's what's great about Matt. I charge you $3.49 to be your guinea pig. Again, blew up my small account challenge today. I'm at $1,000 down 60%. In 2 days, I was up $600 easily. I made the wrong decisions. Honest. Anybody can do it. I'm going to take that 1,000. I'm going to do it into 50. The last time I did this challenge 6 weeks ago, I took $2,200 and I exchanged it into $51,000, and then I withdrew, and now we're going to try it again. I'm going to keep trying it as long as it works. If I'm successful 2 out of every 3 times, and I take 2,500, 2,500, 2,500, and 2 out of the times I make a 1550, that's a pretty good return. So that's what it is. You're not going to kill it every time. It's the law of averages. If I came on and I told you I was perfect, then you could call me full of shit. Anybody that comes on and makes these videos or does live and is like, I can't miss, I'm the best, I'm the best. I say I'm good. I'm not the best. I don't have a crystal ball. And yes, I can miss. Next slide. It'd be funny if my next slide. Okay, so this is it. I was sharing earlier. This is my spreadsheet, by the way. You can see how much green this is. Stocks are on the right. Options on the left. Yes, there are a couple things. I don't want to show it more, but I averaged down with Delta and Carnival. Next slide, please. What was this one? Oh, UVXY puts. This is someone just thanking my public account today, and I appreciate that. 40% in like 30 minutes. Yes, it's all about calling the top. And you'll see he wasn't killing it right away. All right, next slide, please. I don't need to focus on individuals. It's about the concept. Okay, anybody that wants to track Chinese stocks that are worried about Baidu or PDD or, I mean, there are so many Chinese stocks out there. Here's your Chinese tracker, right? KWeb, okay? It was finally showing support around 62. I would love to follow up and see how much support this actually has, because that probably makes more sense than, let's see where it is. KWeb, KWEB. All right. So it's 62.28. It's spiking, which is good. It's telling you people are thinking about China right now. It's only spiking a little, but that's a good tracker. KWeb, okay? So 62.16 is 62.28 after hours. Again, I don't worry about after hours. Even UVXY, if that spikes after hours, I don't care. If either the indexes, SQQQ, TQQ, I don't care about that. It doesn't tell you anything. The next day of trading will be told between 9:30 and 10:30 a.m. and usually a dip and a spike. That's why we get the best value. All right. If you plan ahead for the best sale or the best profit, then you can sell before 10:30. If not, watch episode 47. I don't want to hear any more questions. Why don't we do this before 10:30? Spend an hour. It's only like 20 minutes, actually. Spend 20 minutes. I dare you. Okay. And if you like that video, please give me thumbs up. I mean, I really want everybody to do that. Everything's analytics. So please pay it forward. I charge $3.49 a week. If you're getting this, if I entertain you and you're like, this guy is such a goofball, then yes, pay it forward. Tell everybody I'm a goofball. I don't care. I mean, I don't think I'm a goofball. Next slide, please. I'm darn hot, though. I don't know if you guys see it. All right, somebody was asking me about Tiger today. I like Tiger. I still say 44 by the end of the year. Snapshot it. But the person said, what do you think about today? I don't know. They were selling China. They were selling China yesterday. So that's my tracker. Here it is, K-Web. So I'm going to look after that. I'm going to look after a couple of stocks. Now, when it does flip, when we flip back onto we like China, which will happen, okay? The Chinese stocks will all go up like 5.6% in one day. Yes, Tiger is probably going to go up a lot more. And Futu, I was surprised Futu wasn't as off as much as everybody else. It was only off like a point or two, which might have been like 1 or 2%. All right, similar stocks. All right, so that doesn't make sense to me. And I know people support China. What was this? I can't even see. Oh, DDDD. Yeah, so I'm just showing you 3Ds, right? There's no volume for 5 straight days. Yes, they could sell off. They could take $1 every day. I'm not telling you that they can't take $1, which sucks if it's $33.50 tomorrow or 30, whatever it is. But I'm telling you, the next 1 or 2 days of inflow and volume is so low. So just double the volume, right? The stock's going to spike 8, 10, 12%. So yeah, you might hate your position now. But if you average out, I have some August options. I have some July 16 options. And yes, I have some July 9th options, which are getting killed. I bought the August ones today, close to the end of the day when it was under $34, right? It was under 34, right? It was like $33.91. I was like, okay, well, okay, if it takes a month, I'm okay. At $33.91, it's a freaking buy. I got to look at where it is now because I'll probably make myself sick, right? It's probably the only position that I entered into. So it's all about calls. Again, my calls were on fire today, but if I put most of my money in DDD, which I did for my small account, I basically blew it up. All right, here it is, 34.30. That's a surprise. I was expecting 33.81 it went down to. Again, I don't control this shit. If the market's selling off or somebody takes a short position and somebody sold a bunch of shit today. So much for those paper hands, scissor hands, all right? Next slide. Do I have any more slides? Oh, this is it. I'm transparent. I have losses. My small account's turning around. So people are saying, all right, what are you going to do with certain positions? Let's talk about certain positions, okay? UVXY, I'm holding. Let's look at a couple positions. I don't even know where UVXY is. I'm going to share this. Oh, UVXY, good. It's down 0.5% after hours, probably under $28. Booyah. Okay, it's going down a lot lower. eBay, it's down 1.53% after hours. I don't give a shit about after hours. So if it opens up down 1 point, every time eBay dips, you buy it. Look at the chart. Look at the 1 month chart, okay? I'm not touting any stocks. I'm not pumping and dumping. I'm telling you, look at the 1 month chart. That's what I look at. Inflow versus outflow. Look at the chart. Tell me you don't like eBay, okay? Seagate Technologies, STX. Yes, I mentioned I have options in STX, right? I have stock too. But what do I see? After hours, it's flat. It was up 2.56% today. It crossed 88. I told you it's going to like 90. When it crossed 90, it'll be 92, 95. Now, what I've noticed about STX, and I hope I'm right, is it moves pre-market. All of a sudden, you'll go to sleep and you'll wake up the next morning and it'll be maybe 10,000 shares. And all of a sudden, it'll be up 3.5%. And it's not crushing on a day. It goes from up 3.5% to 4.5%. And that's it for the day. So if you got in during the day, you only made 1%. You're like, nothing's great. But then the next morning, it moved. So when it went from 64 to 104, and I didn't get in any time, right? No time I got into STX because it was up every morning pre-market. Every time I looked at it, it was too freaking expensive. So I've been waiting on it for go down. I've been waiting on it. So when it sold off 13 straight days, I was licking my chops. Other people saying that's the worst freaking chart. Who said that? There must have been like 4 or 5 people go, dude, are you sure? STX, it's like the worst, ugliest looking chart. And I know people grabbed options for 7.2, and I explained to them, we're grabbing the turnaround. We're grabbing a rebound play. Nothing goes like a V, one to the other. It's not like it goes shitty one day and up the next day. If you're investing in a stock or a meme stock, right, and it's going down 20% or up 20%, or it falls off a cliff, that's just not investing. Investing is finding demand and volume, all right? Carlos is having a good time. I don't know why, but let's get to some questions. Maybe I'm funny. No, please. I haven't spoke about Plantier for a while, but I do know there were some option trades today negatively on Plantier. So 4-letter stock, yet it's going down. They don't really have earnings, so they're more of a speculative play, which I talked about. Even though tech is strong, spec stocks, and we'll mention Plug because Plug doesn't have revenue, Blink doesn't have revenue, right? It is an EV sector thing. Plantier is not, but I don't think they have revenue. So yes, I saw people buying puts, all right? So yes, I expect tech to be strong, but it's going to be tech giants. It's going to be Amazon, Netflix, stuff like that. Yeah, please like it. It's right there. Subscribe. Do me that favor, okay? Even if you're paying $3.49 a week for my platform, just turn on this stuff, all right? I'm here to educate, and the more people that like this, the more people it's shown to. One day, YouTube showed me like 75,000. Since it's been like 35,000 or 25,000, let's get me up to 70,000. You guys promised you're going to watch today, and 100 of you let me down. So I'm disappointed. Maybe I'll just won't tweet tomorrow. All right, next slide. I mean, I'll pay you all your 49 cents for the day. You can all have your money back. Here's 49 cents. Here's yours. Do you want yours in pennies or nickels? Okay, Matt, question. Option, random points throughout the day. I guess when it'll drop like 80% when you see the bid ask someone moving around the ask, should you be concerned? No. This is somebody that's watching the stock, and instead of planning ahead, they're using with emotion. So you're watching the stock drop, and all of a sudden they drop their ask from 290 to 280 to 270, and they're moving 500 contracts at a time. They're trying to catch it because they're trying to maximize their value. Now, if you follow my platform, I say walk away from the screen. If you decide you're going to get 33% and you bought a $2 option, well, it's 33%, 70 cents. You set your sale at 270 and you walk away. If you're watching as it goes to 249, 259, 269, and it doesn't sell, and then it goes back to 249, and then you say to yourself, shit, it's going to go down. I'm going to sell. And you sell for like 235. And then what happens an hour later? It goes back past 270. So if you walked away, you would have sold at 270. Instead, you sold at 235. Now you say, that's not much. I still made money. Yeah, but you gave away $35 per contract. All right? That's what it is. And when you look at the percentage, you're giving away 17%. So I ask you, is it smart to give away 17%? People's trades only make 17% and they're happy. So if I can help you be more efficient, and that's what my platform is about. My spreadsheet, when I talk about episode 42, it's a spreadsheet. It's there to help you be more efficient. The whole premise of my platform is not to talk about stocks. It's to make you the most efficient person you can be. At trading, I don't care if you've been in 1 year, 1 month, 15 years. I spoke to someone who has a master's in mathematics and somebody else that has a master's in finance. Yes, for my lifetime members, I give you a 30-minute lesson. No lifetime memberships. There haven't been for like 2-3 weeks. We cut it off. We filled our max. It was like 80 people. That's great. We did it in 3 weeks. So yes, my shit is legit. All right, those people paid a little more, but it's $349. So if you're just watching me now and you're mesmerized, watch some of the option videos. All right, so yeah, don't be alarmed by that. Just plan ahead. Know exactly. Use your spreadsheet. Another tough day. Thanks, Matt, for STX average down alert. Almost at break even. Okay. Yes, I did not average down with my $87.50 ones. I actually would have been breaking even because I was in at 273, and I think they were $1 this morning, and I think they're like $1.50 now. So my average would have been $1.40. Now they're $1.50. Why? Because I average down safer. When I tell you to average down and your options out of the money, $87.50 this morning. So the stock was $85.98, let's say $86 when I averaged down $86. Why do I want to buy the $87.50? I'm throwing good money after bad money. So no, when I tell you in episode 37 how to average down, I don't know why you guys haven't watched it yet. I mean, 3,000 of you have, 2,500 of you. Yeah, that's a lot for me because I don't do social media. I mean, I love social media. This is great being able to educate. So thank you for the people that are watching. Let's get to more questions because I want to thank you guys. That's how I thank you. I answer questions. All right, Boeing calls. Moving with the Dow. Now, I already mentioned that I happen to like Boeing is my catalyst, not my catalyst. It's my tracking stock for the Dow plays. I mentioned Boeing. So I think I mentioned that. Let's see where it is. Yeah, I mean, I had another shitty day. So again, we got tricked around, what was it? June 24th, June 25th. We had like 3 straight Dow days or 4 to 5 Dow days. And you thought the Dow was going to recover. And the 10-year was spiking a little. And we thought inflation was coming, which means Dow stock's more attractive. When money's more expensive, tech is less attractive. Dow is more attractive. So yes, I think that's coming soon unless we see deflation like Kathy Wood mentioned. And I know I don't see where the 10-year's at. I should probably check. And I'll do that for my platform members before tomorrow. So right now, I would not invest in Boeing. Boeing would be a blowing right now. And I guess that would say bad things for Delta and Carnival. But I just have a feeling about those two stocks that it was the right time to invest. So yeah, Boeing's a flip of the coin. If you invest, please, 25% rule. All right, so whatever calls you're pointing out. And yes, if you're right or wrong, those calls will be very beneficial. It's risk versus reward. Understand this. If you're wrong about Boeing and Boeing sells off for 4 more days or 5 more days till they expire, right? You won't even make money. You'll be so far out of the money. Boeing will be like 216, 218. Yes, if the Dow throws up on itself, Boeing will go down to 218. It'll lose like 8%. That's 8%, right? Yeah, like 17 points. Okay, now the point is, if you're right about Boeing and Dow flips, and I think the Dow is going to have a 400 to 500 point gain before 716, I think one day, and I don't know the catalyst, it's just going to explode. And I don't know if it's a president's bill. I don't know all that stuff. I just go by my guts, okay? My gut feeling tells me the Dow's been way too beat up. And I think those two positions, I think this one will be okay as well. If it pops, so I was going to get to it. It could be like a 247. So it could be like a $15 contract. But yeah, in like 7 days, it could pop that hard. It could pop 8%. If it goes down 8%, it could pop 8%. So it's your risk, your reward. I entered into some risky plays. Yes, next one. Got to drink something. All right, Sapphire, welcome. Thank you. So yeah, my platform doesn't require you to have any amount of money to start. So if that's what you're asking about, Romeo, who's one of my prodigies, who's a lifetime member now, started with $500, went down to $84, figured it out, traded the right way, and then went north of $10,000, withdrew $3,000. His account's north of $7,000. So you do the math. It's like 6 weeks for him. Not saying that's your typical results, okay? But tell me, Sapphire, I want you to watch the videos. When you join the platform, it's not instantaneous gratification. It's not like you're buying a movie ticket and here I am and you're like, blah, 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 and I tell you what to do. I don't spoon feed anybody. So if anybody's expecting that for $3.49, I'm going to spoon feed you. No, I'm teaching you to fish. I'm teaching you to change your lives. I get emails on the side now because I don't get DMs anymore, but I get emails that, dude, you changed my life. You changed it. And I used to tout it every day, but not every day is so successful for everybody. So on days that people are struggling, I don't talk about that shit. All right, one person's gold, another person's whatever it is. Probably not the right thing. But yes, $500 you're going to learn. You know nothing about stocks you want to learn. Please watch those episodes. Spend 6 hours. Don't spend any of your money yet. If you have $500 in Robinhood or Webull, don't do shit. Don't trade anything. You don't know anything yet. All you're going to do is waste your money, and that would be such a bad lesson. People say, oh, it was an expensive lesson. It was only $500. Oh, it was only $300. Oh, I have more. Are you kidding me? I charge you $3.49, and I think that's expensive. I wish I could charge. If you guys get me to 1 million followers, I'll charge $1. All right, for a full year, I'll charge $1 a week. I have 1 million followers. I'll charge $1 a week. That's it. All right. Point is, $500, $500. Thank you for joining. All right. Take your time. Make sure you understand. Okay. Read everybody's responses. There's ways to enter, and I'll explain it to you. We look for sales. You're going to buy that dress or that jacket. It's $300. You like it. It's pretty. Whatever it is, it's fashionable. You don't want to pay $300. You want to pay $180. So each day you go into the store, you're like, I'll give you $180. And the sales lady says, nope. $180. Nope. $180. Nope. Finally, somebody just sold you the option you're looking to buy for $180. So when it bounces to $400, which is the original price, you just made $220. I'm speaking to the microphone like this is her. You just made $220. Everybody else is breaking even. So I don't care if you wait. Make sure you understand. Good stock to buy right now. Again, I like STX. I wouldn't chase. So you're looking for STX. If it goes back to 87 tomorrow, or it's off 1.5% and the market's getting hurt, that's when we jump in. So you have to understand, when you buy something, we're looking for something that's beat up, not beat up like a beat up boxer that's all black and blue. You want that shit to rebound. So please, we're looking for rebound stocks. We're not looking for the ugliest, biggest piece of shit out there, because some people do that. Some gurus find the thing that fell off 70% today, and they're like, yeah, buy this. And maybe they're right, but that's not trading. That's not trading. All right, next question, please. All right, Isaac, let me look at FSR. So FSR, like the other EVs, are beat up. Like China, NIO was beat up. I mentioned to my group XPNG, all right? They did an offering on the Hang Seng market, right, the Chinese market, and it was terrible. It was received terribly, all right? And the stock was still up 2% pre-market. I think it's off 6% today. That is a different stock, and I'm sorry, FSR. So I will look at that. Let me find this. Oh, 3D's up 7%. Sorry, I get excited when I see things. I don't really care about after hours, but it's better than being down. No, Fisker looks beat up. I bet this looks, it's like XL. So I tell people I have a position XL that I average down on, and it's shit. And I'm so sorry that I got stuck in it. In XL 753, I think, or something like that, 743, 763. And there was demand, but that chart looks the same. It's light volume and it's more outflow. And on days that are inflow, they're paying the cheapest price. These are people that are investing for 6 or 8 months. So they're getting a steal right now. Yeah, I think Fister's a steal right now, but 6 months from now, you'll probably see $29 on it. It's like 16 now. $29 6 months from now. So yes, if you want an option, buy out Fisker XL, which is beat up. You look at it every day. You just want to cut yourself for suicide. Not something to joke about. Please support suicide prevention. But yeah, XL just depresses people. Same with Fisker, I bet. It has 5 shitty days. Same if you were an STX. Imagine you were an STX from like $98 down to like, what was it, like $84. Every day you lost $1.50. It would depress yourself. We don't look for those. We look for positive stocks that will spike when they get invested. Now, people mentioned Sorrentino Therapeutics to me. Yes, I used to dabble in that stock last week. I exited out when it spiked to $10.66. Now it's at $8 and change, I think. And someone's saying it's a great deal. It's a great deal. No, it was a great deal when I knew it was going to spike. In fact, I know some people are in that, and some people that I like are in that. So I'm actually going to look at the stock and see how beat up it is. And if it was just, it consolidated pretty low. That was a pretty substantial consolidation. So SRNE is either going to be the steal of the century at $8.27. Shoot this, SRNE, steal of the century at $8.20, or the biggest mistake of your life, and it's going to drop to $6.20. Yeah, so I don't know. The chart is telling me it's either going to spike back really hard to like $9, $10, probably $1.80, which would be like pretty substantial, be like 20%, or it's going to fall. And if it falls, it's going to fall 20%. So I don't like stocks like that. Stocks can go up 20%, down 20%. So I'm in XL, you're in FSR still. So I don't like either one, but I would not be surprised if one of those two spikes. I'd probably I wouldn't be surprised if either spikes. They'd probably spike together. CCIV would probably spike. Workhorse would probably spike. But they've all been taking profits. Lee, Xpeng, Neo, even Tesla. 2 days ago, I spoke about what shit Tesla's chart looked like. It was like 684. What is it? 644. 44 points on Tesla is a lot of money when you're playing the option games. And people said to me, did you buy any? No, because what happened? When Tesla fell off yesterday, which I talked about pre-market, it dropped off at market open. The options were expensive. If I was wrong and I overpaid for an option yesterday, say I was wrong about Tesla, it would have spiked and my option would have lost like 80%. So I told you, even though I think I'm going to be right about Tesla, I wasn't going to risk it. It's risk versus reward. If you don't understand risk versus reward and you've never felt the pain that you don't understand, you need to be beat up, and nobody deserves to be beat up. And I want everybody to be winning at trading. But if you never have a stock that goes bad on you and you never average down the wrong way, you never learn. It's a different thing to experience it, and it sucks. But yes, please, Sapphire, don't trade that 500 yet. FSR, I'd pass on right now, but it could spike. All right, next question, please. Plug options that expire this week. I am not. The only plug options I have, I believe they expire September 17th, and I have 3 different options that expire September 17th. So when plug was under $25, I was buying $25 calls, and each one of those options is up 100%. So that's why I haven't touched plug. Imagine if it's up 100% now. Plug was just $33, $34. Now it's $30, right? So no, I don't have plug options. Again, it's more of a speculative stock. Plug, Blink, Neo, Lee, Ping, Ride, Workhorse, CCIV. Do you get the sense of what I'm talking about? Even green energy stocks. So again, if you're going to be in green energy, I do not like First Solar. We spoke about that before. I like Canadian Solar. That's the only green energy play. I understand BTU had a run on shorts today. I don't F with that. I don't mess with BTU or any short stocks. That's not my game. Meme stocks aren't me. I could tell you, though, AMC was going to shit when it was 72. I said it'll be under 50. It's under 50. GameStop when it was 300. I said it'll be under 200. It's under. So, again, it doesn't take a freaking genius. I forgot what I was looking up, but I want to look up AMC right now because aren't you guys curious? I am. $45. Oh, I'm so sorry. Please, guys, I hope you took your profits. AMC can go down lower. And GameStop, too. Is GameStop, what, 196? 190. Okay. Yeah, I mean, talk about easy. 4.5%. If you're in GameStop options, you're probably paying more for IV, but you easily could have secured 20% this week. Plug, same thing. No real earnings. Better to average out. When I was crushing the plug options, plug was like $22, $23, and I was buying the September 25s. Best thing I could have done. That's the only thing. I don't have any better guidance than that. I'll look at plug for you, Amy. I mean, I'm sorry for not suggesting that. Plug, I mean, let's see how bad it is. I know plug was down to, what, $30 today? Yeah, $30.17, as low as $30.04. Yeah, so it could easily retest where it was 618, 617, 616. So I believe there will be support. But this is what plug does. After earnings, it shows some good life, and then it falls off. So I'm actually going to look at the one-year chart because each time after earnings, it falls off. Earnings falls off. I mean, yeah, you know what? I might have to sell some plug. I wish I decided this yesterday because it's down 8%, and my options are up 100%. I might have to close out that September options. The next day, that plug might spike. I mean, that just tells me that plug, Blink, Neo, they all could have hard times. It's a speculative play. So maybe the market does need to go down, and maybe the earners and the real good stocks, like the stocks that have earnings, Facebook, are going to continue to go up. Roku, going to continue to go up. If Roku was down today, which it was at some point, might have finished down, that was a great entry today. Let's look at Roku right now because I've been talking about that. I didn't enter in today. Nope. I was looking at the UVXY. That had all my attention today. Because if I was wrong about the UVXY, say it spiked to 30, I had a lot of money on the other one. Roku, $419. That's awesome. I thought it'd be closer to 500. It's been consolidating for like 6 straight days. Yes, so Roku's going to take off one of these days. It'll be 500. It's going to come out with some news. What'll happen is some analysts will say Roku's about $520, and it'll push north. All right, next question. That wasn't your question. I'm sorry, Amy. All right, what do I think about EBOM? Unfortunately, it's a Chinese stock, bro. Chinese stocks have no support. So they could come out with the best news tomorrow and it would spike to like $3.10 and then it would retract. Unfortunately, it's just beat up. So yes, I still have some options. I'm in at, I think, 73 cents for the 250 calls, which would mean 323 is my break-even point. When it spiked to 130, I said I should have sold. I didn't. That's completely my problem. But notice, I mentioned certain stocks to average down on. I didn't mention Tiger today. So people say, hey, Tiger was beat up. Yes, I can't help it. Apps was beat up. I can't help it. You can't average down if you think it's going lower. If you think something's going down lower, you can't average down. So EBON, my play on EBON right now, if anybody's new to EBON, EBON, I would go out to January. I'd buy the $2.50 calls. And what are you paying? Like $1.20, something like that? January. Let's look at it because it's good advice for everybody. And nobody all buy this at once. Are you kidding me? Buy different ones. So you go to the options. And the premise is that EBON will actually be like $7 by January, which it should be. So the $2.50 calls are $1 something, right? Yeah, $1.04 to $1.09. So you spend $1 now. So you're saying EBON has to be $3.50 by January. Are you kidding me? $3.50 by January? If Bitcoin doubles, if Ethereum doubles, if crypto doubles, okay? That's my thought process. Then yes, this stock should probably be north of $7, okay? So if you can buy these options and get out of your stock, watch episode 14. You get out of your stock, it gives you till January. If the stock is $5 and you spend $1, you just made 150%. You could sell your option for $2.50. $1 returns $2.50 if it's 5. Imagine if it's 7. $1 returns $4.50. Don't everybody buy the EBON January 2023 options. All right, next question, please. By the way, I can't see Carlos anymore. I'm doing this other thing, but I told Carlos to tell me if they score. I don't think you'd do that yet. Still can't tell him. Yeah, I think 2-2 maybe. What if I can't afford to average down 2-1 or buy in at the money? Okay, then you can't play with options. I can't see Carlos. If you can't do it the right way, if you can't follow the rules, and if you have $500, you can follow the rules. Let's say you have $120. Okay, so you can't average down. You can't be in the money because in the money options are $150 per one contract. You only have $144 in your account, your whole account, $144. That's all that left. What do I do, Matt? You better find the best damn position. You find an option that's $2.10, like a Square option or something like that. You look for a shitty market day where Square's off 4%, and somebody sells you that $2.10 option for $1.40, for $144. You go all in on your one option. Now, when Square rebounds the next day or the following day, and you get $500 for that, that's how you take a small account of $144, very safe, up to $500. You better damn be right on your first play. So if you're part of LifeArm and people are talking, you better be right. So the only thing that I would have been 100% correct on today, and even though I like STX, yes, it surprised me that it went up, 2.5%, even though that's what it was pre-market. It was up 2.6%. So it doesn't really surprise me, but 2.5%. Okay, so UVXY was going down. So when that spiked the most, if you had $144, you find the one put option you could afford. I don't care if it's a 28 to 29.30. And when the UVXY goes down by $1, you sell and you double your money. And then you cross your fingers that you can get that lucky again. And you better be right the first 3 trades that you make. That's it. That's what I was telling Sapphire. She better not make a mistake because you'll blow up your account. You don't have much money. There's no learning curve. You're thrown right into the line. So I'm trying to help you out. I'm trying to level the playing field. That's why I'm here. I work for the bad side. Now I'm trying to work for the good side. So the people that talk shit, I know there are some haters out there. People that talk shit, yeah, this dude doesn't know what he's doing. He doesn't use this. He doesn't use that. He uses his phone. He's trying to simplify for you. He's full of, I don't give a shit what they say. Haters will hate. My rules work. My lessons work. All right, I'm not claiming Matt made me rich, but I haven't had to eat a piece of the loaf. That's funny, Mike. Thanks. All right, so yeah, subscribe to my channel. Push the notification. Hit the like. Everything's analytics, okay? I'm here every day for an hour. I don't care if you have to watch the replay. I will tweet the replay. If you follow me on public Twitter, that's great. I'm going to tweet the replay. But please, I'm trying to give you guys stuff. Help me out. Help me share it. Help me grow the family. Thank you all. We'll answer more questions. Oh, England 2-1. Hopefully it's not over, but it probably is. All right, see you guys. Have a good night.